All right, everybody. So let's just review the market action today and see how many turns there were and what were the opportunities. All right. So basically, it turned out that this thing right here was a spring. Right. So it was a rally, pulled back, test the selling area, come down, do a spring, take out the high. Right. So what happened today? And for this, I'm going to mention that if you're day trading, you really need to have an order flow technique along with market internals. Whichever internal you use, any directional internal, doesn't matter, just use a directional internal. And even if you're swing trading, you should have market internals. Market internal is very important. Why? Because of one thing. They confirm trend. Market internals confirm trend. Just like volume is helping you confirm buying and selling coming in at different levels, different prices, market internals confirm trend. So, I mean, to me, it's I think it's very important because if you're trading the indexes, you have this information given to you by the exchanges, and it doesn't make sense not to use it, because this is the edge that the equity market has that no other market has. Equity market has components, and the exchanges, they publish internals. You're not going to find internals on any other market. You're not going to find internals on any other commodity, bonds, but you will find it in the equity markets. So it's an additional data point where you need to know how to use it, and it's really nothing more than confirming trend and all that. Anyway, so we had some fundamental news. Market opened up, right, and continued up, but there was some bearish divergences. And I don't mean like momentum divergences. Momentum divergences have their place. But what happened was, you had, I'll show you right now, right? So market's going up, 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 up. Now, if you understand buy low, sell high, right? Buying low means that there's volume near low prices, and selling high means they're selling at high prices. So this was right there. That's the biggest print. That's your climax. So as soon as, I don't know what time this is, like 9, around 10 o'clock, you had this big print come in. So, I mean, if it's going straight up like this and they're selling on the high, selling on the high, selling on the high, what's the next step? The next step, as I explained, is you need price confirmation. Price confirms volume. It's not just volume confirms price. Price confirms volume, whether it's supply or demand. How price confirms volume is the direction it goes after the volume. So volume comes in, it goes down, price goes down, making a lower low. What does that mean? That means it's aggressive supply. This is distribution. After that, tap, and look at this. Alright, so then what happened was they built a base right here, accumulating here, or reaccumulating, or whatever. So they're going to come back to this area. Alright, so it's lunchtime reaccumulation. And the first evidence that it's going out is higher right there. So that's volume on the breakout. Basically, they're clearing the resistance. So you want to accumulate. Where's the accumulations? Right here. Right there. 29,000 contracts. And then the break. So that means it's going higher. Then the volume comes at the highest, right? The volume comes at the highs. And what do you notice? $48,000. And what happens? What does price do after this? It goes lower. So this is encountering supply, which is confirmed by price. This volume is confirmed by price. Price, the supply or demand, the direction, is being confirmed by price. Because the volume, again, is scalar values. No direction to volume. It's just someone is taking large position. And it goes down. And then what happens? That bar. So this is redistribution up here. And this is the market going back down. But it hits this accumulation area. So it needs to take this out. Because these guys are still there. You know, and until their low is taken out, they're still there. They accumulated here. It went exactly to that level and bounced. So this needs to be taken out. It can bounce. It can go up. It can continue to go up. So you need this to go, you know, take out this low, and then you have a nice trend. All right, because this is the lower low, this is the lower high, etc., etc. All right. Now I'll show you how internals they tell you, they help you with trend. All right. If you can see that the ES is going up. Here, the market is going down. The market breadth is going down. But here, ES is going up. This, on increasing volume, is downtrend, going lower. But this is going higher. So one of them is going to correct. And as soon as the ES says, I'm going to correct by making this low, it sets up the short opportunity. All right. Now, same thing here. This is a warning sign, and here you know there's an uptrend. And it keeps on going up until this. This makes a downtrend. This here doesn't make a downtrend yet, but it's going lower. Why? Because the market breadth is in downtrend right here. It basically established a downtrend. And this doesn't look like we established a downtrend, but it did. And the key is, breadth is going down. This is going to go down, pulls back, and crack. Now, after that, I can't really judge because you don't have it after hours. So I don't know. So this is one way to use market internals. One of them is going to correct. Either the internals are going to correct or the ES is going to correct. But I had a pretty good idea that ES is going to, because if you just look at the volume on the waves, you're going to think this is effort, but it's not effort. It's selling. It just doesn't take out the low yet. It pulls back while this is continuing to break lower, offering the crack opportunity. All right, so what else? All right, so I wanted to talk a little bit about volume. So we're just going to talk a little bit about volume, right? So typically, you know that volume, you have high volume and you have low volume. Now, high volume, what behaviors? So let's just focus on high volume. What behaviors? Obviously, the breakout on high volume. That's one behavior everyone knows. The other is a climax, high volume. Change of behavior has high volume. Effort has high volume. Right? And of course, absorption, if you have volume by price, absorption and breakouts, they look the same if you're using volume by price. But that's the idea. These are the high volume behaviors: the breakout, climax, change of behavior, effort, and absorption. Low volume is basically a low volume pullback, and the last point of supply, and I'll just call it what Wyckoff called it, like the feather's weight. All right, that's like the tipping point where trend breaks. All right, so all of these behaviors, before you understand the behavior, the first thing you have to understand is common sense, that buy low and sell high. Really, this is the first thing you got to understand before you go into any of these behaviors and become a rocket scientist. This is it. Buy low, sell high. I know it sounds simple, but this is the foundation of all of this. All right? Buy low, sell high. What does that mean? Now, in order for me to explain this, you have to understand the turning point. What you will note is that this turning point can be a trend, meaning this here, this leg, right, can be a trend, and something like that. Right? Right? So they go down and up. Right? What you'll notice is where the high volumes. The high volumes are here and here. What is this and what is this? This is your climactic behavior. This is your change of behavior. This ends the trend or the swing. This starts the trend or swing. You have on this side, you have here, you have a high volume here on this side, and you have it on this side. On the left hand side and the right hand side, you have high volume. So you have it, let's say I just put it like here and here. You'll have it. That creates the turn. One to end the move, the other to start it. Okay. So let's take a look at some examples. That ended the move right there, and that started the move. Ended the move, started the move. Ended the move. I guess this one started it. It's not that high, but whatever. Ended the move, started the move. Ended the move, started the move. Ended the move, started the move. It's basically buying low on the way down and then buying low on the way up, because all the buying on the way down is done, so they need to buy on the way up. So buy on the way down and buy on the way up. Sell on the way up, sell on the way down, buy on the way down, buy on the way up. So that's what happens. So this is important to know, because the model that you have to have in mind, is that first it's this. First it's this, buy low, sell high. And I know it sounds simple, and I know it sounds, but I'm showing you what, buy low. Buying low, what is buying low? It's taking a look at buying at the climax, when price pulled back, and then the change of behavior. That's buying low. Selling high, it's going to be here. There's going to be high volume here. And there's going to be high volume here. This is buying low. And that is selling high. And it is composed of what? Of a climax plus a change of behavior. Climax plus a change of behavior, where the climax ends the move and the change of behavior starts the move. That's how you want to just get an understanding of it. End the move, start the move. End the move, start the move. That is the turning point. Turning points typically have climaxes and change of behavior. Climaxes and change of behavior, one to end the move, the other to start the move, so on and so forth. And this is the model you need to have in mind. How does the change of behavior starts the move? By it taking out resistance. So I'll show you, like over here, this is your climax, and that right there is your change of behavior. That's your climax. How do you know in advance? You don't know in advance. You only know after this guy. Climax plus the change of behavior sets up the turn. So you don't know in advance if the 41,000 is a climactic. It might be breaking lows. You only know after this, where the change of behavior has high volume and it should take out the high. It should take out the high, trapping the climax. Okay, it should take out the high, trapping the climax. It should take out the high, this is the opposite. So this is buying climax, so take out the low. What does it say? Take out, I don't know. Take out the low, trapping the climax. Take out the low, trapping the climax. Take out the high, trapping the climax. How do you know that this is the climax? I know not all my signals are going to catch it, but you see the 29 is bigger than all of these prints. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. So I know that this climactic. Right? Here, the 27 is kind of low, but if you want, you can wait until this crack. So it's that. All right, so that's all I'm going to really mention here. There's so many examples. Sometimes it will not be clear. All right, maybe you don't see the climax or you don't see the change of behavior. Whatever. Sometimes you don't see it. Like I cannot really see the climactic behavior here. But I know this guy picked up and this guy picked up. So I can't really see the climax. Do you see it? I don't. But here I see it and here I see it. Here's your climax, that's your change of behavior. Anyway, so that's all I wanted to mention. That turning points, they require two key elements, the climax and the change of behavior. And the basic model is buy low, sell high, right? And you want to keep that always in perspective. Otherwise, there's too many behaviors and you're going to get lost. So buy low, sell high, climax, change of behavior, setting up the turning point. The third thing is market breadth, helps confirm trend, and price confirms volume. Price direction confirms volume. All right. And what do I mean by it confirms volume? It confirms whether it's supply or not. That's basically it. I mean, if it's aggressive supply, it's distribution, like right here, we know that this is going to go lower. Why? Because trapped, comes up, test, sell, same thing here, boom. All right. So that's all I had. Have a good evening. Bye.